Good afternoon, all. So, as I said in the last post, I will be coming with a dashboard which will be telling you about what are the fundamentals and ratio analysis of TCS and Infosys. So, these two are the hot picks in terms of an IT. And today I'm going to show you some of the important values which one should consider before making a proper investment idea. In the first chart one can see that it's about total sales. So the blue color line indicates the uh, TCS and the red color indicates the Infosys. So as you can see that with years from 2016 to 2020, the overall sales growth in the TCS has been good, and it stood at almost 140,000 crores. All the values are in crores, and in Infosys, even it is growing in a, I mean, the same way which TCS is following. So it stood at almost 80,000 crores. So with this one can uh, clearly see that the TCS is doing much better compared to the Infosys in terms of sales. So this is about the first one, and these are the values, right? And the second chart, which indicates, the second chart is about the profit which TCS and Infosys are doing over the year. So the dark green color indicates TCS profit, and the light green indicates the profit of Infosys. Even in the profit, you can see that TCS is ahead of Infosys. The considering 2020 profit, the TCS stood at 32,447 crores, whereas Infosys at 16,639 crores. So this is about the profit. But I just want to share something interesting, that is reserve and surplus. So why this reserve and surplus? So reserve and surplus is that number which the companies keep it with themselves. That profit the company keep with themselves after spending all its money over the operations, and uh, whatever the capex, every after all investment, the money that is left with them will be kept as a reserve and surplus. So when you can see that with years, even that is growing, there is an ups and downs in both Infosys and TCS. So in the last year you can see that even TCS is ahead in terms of reserve and surpluses. That is, in 2020 it made around 83,751 crores, but in Infosys almost 63,071 crores. So with this cumulatively, I can say that all these three, profit, sales, and reserve and surplus, TCS is leading the table. So when you are looking at what are the total sales, profit, and reserve and surplus, no one can deny about the loan or the debt they are taking to run their operations. So with years, you can see that uh, in 2016, Infosys did not took any kind of debt. In 17 also they did not took. 18, 19, and even in 19 till 19 they did not show up for the debt to run their operations because it was going smooth. But in 2020 you can see that the red color indicates the debt which Infosys took. That is almost 4,014 crores. But the blue color indicates the debt which is taken by the TCS. There is a small amount of debt which they are taking every year. There is a spike in 2020, that is almost 6,906 crores. So looking at this, even it shows that the TCS is in ahead in terms of debt also. So last but not least, I just want to show you, after having all the sales, profit, to run these operations they took the loan, and there is a reserve and surpluses which can be used in situation like this pandemics. So one should be aware about the earning per share. So EPS, you can see that both TCS and Infosys are doing really bad in terms of uh, generating money on each share. That is, in 2016, the light red color indicates the EPS of Infosys. Both had done tremendously good in 2018. In 2018, the EPS for the Infosys was 71, whereas for the TCS it was 135. But you can see there is a drastic change in 2020. For Infosys it is 38, and for TCS it's 86. So one should not deny why there is a drastic change in the earning per share even after having a good profit, but they are not able to give a return for the equity holders a proper amount. This is because though they are getting proper money for their operations, but and even the numbers in the sales and profits look fantastic, but there is a mismatch between the money they are rising and the money they are giving back. The operation with this, I hope you are clear that money is not being properly utilized. There are the outstanding shares are being increased continuously, which means there is a lot of inflow of money, but that is not being utilized to generate proper sales and profit. So here you can see that the blue color bars show that there is an fall of earning per share for both TCS and Infosys. So lastly, I would like to show you what is the dividend payout pattern, because uh, when a person invests into any stock, he looks for two things, that is over the period of time, the price appreciation at which he has bought the stock, and the dividend. These are the only source where he can make money. For the long term investor, the dividend is something that attracts him, and even here I would say TCS is much ahead than Infosys. So you can see that there is a continuous increase from 2016 to 2020. You can see that 43 was the dividend payout, 47, 50, 30, and now you can see that in last year they have paid out 73 as in dividend. But in Infosys it was like 24, 25, 43, and 43 to 21, and now 17. So overall, I mean in cumulative, I would say in all, TCS is leading the table. And with these charts, I just wanted to show you what all the parameters it takes. When these are just the fundamentals, these are not only the parameters you should consider. There are a lot of things. So which I would like to say orally, that is, recently TCS and Infosys are continuously doing acquisitions of the startups. Um, so what does it tell? There are two kind of growth which one would like to see. That is the growth from their operations, their core business, and the growth from or the money cash. I mean the cash flow from the acquisitions they are doing. So in recent study, you can see that Infosys, I mean the TCS is even ahead in this also. They have acquired more number of startups which are into the digital than Infosys. So hope you got some insights with these data, which I tried to explain you with the graph, because uh, when you start learning, one should try to analyze when you are comparing two stocks. It is very much important that where they stand with respect to each other, whether we are giving the proper value. These are the values which their I mean reports are telling, but one need to see what is the current price of the stock in market also, because sometimes you will now you can see that there has been a very tremendous momentum in the market. So if you buy at this stage, you will not get at what valuation we have bought this, and after a sharp correction you will feel like this stock is worst because you have not analyzed what is its actual value. For example, today the value of TCS is around 2800 to 3000, and when I was doing its actual price, it's around same, means 2600 to 2800. So when you bought it that price, it is good that you will exit with a good profit. But if you had bought it at 3000, it was at 3100, 3200, today it is trading at less price, then obviously you will be